Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Update for Wednesday, August 3rd, 2022. Hope you're all having a great week. Market sure had a good day today, coming off a great day yesterday, starting to build some momentum here as we're really in the thick of earnings season as companies are coming out with their earnings and revenue estimates, as well as future projections looking forward. And what we're seeing develop here in the market is a theme where the results are coming in far better than feared. And if we know anything about earnings season, it's really expectations versus reality is what dictates how stocks react during earnings season. So as we came into this earnings season, right, we came into July, many market participants felt the markets were going to fall in July. We have very light trading volumes in the summer. We were a couple weeks out from a Federal Reserve rate hike, which was known by everybody that it was happening. And yet, what did we get? We got the exact opposite, right? Markets gave us a really solid month of July, the best monthly gains since it was December of 2020, since we've seen gains like this. And now we roll into earnings season where it was really time for the rubber to meet the road, right? And that's what earnings season's all about. It's like a report card every couple of months where we get to find out what's going on under the hood of these companies. And clearly, you want to know about the companies that you own and how they're performing. But in a market of stocks, many companies that we don't own will also impact how the markets trade, right? Because you can't own them all, but they're all going to have their own individual impact on stocks. So, and on markets themselves. So, what we've seen really over the last 10 days or so is earnings have come in better than expected, and it has really calmed a lot of the fears in this market. Now, we're not ready to sound the all clear signal just yet. There are still some key levels that we want to see the market achieve. And of course, we want to see inflation roll over as evidenced by the CPI. But looking at some of the back channel data that we study, we believe the evidence is there that inflation is rolling over, likely because the consumer is softening a little bit. But nonetheless, the backdrop for stocks has improved dramatically. And when we take a look, at the market over the last 9 months or so, right? Still plenty of work to do to get ourselves back to those highs, but the market is really starting to build some momentum, and it's doing, hopefully, we think, the job of building a base here to act as a launch pad. And we've talked about this sequencing pattern, right? Markets take the stairs up and the elevator down, and it really stinks when you're on the elevator going down. But we will take this type of constructive move higher. The quicker the better, but sometimes when markets move too quick, too far, in too short of a period of time, they're likely going to give those moves back. So this to us is the type of pattern that we want to see. Market taking the stairs up, breaking through some very important, and I'll just draw this line here, breaking through a previous breakdown area. Okay, so again, that's one hurdle cleared. The next area that we'll be looking at to see what the market can do is about here, right? And then if we get through that, then we can start talking about some of these levels up here. But unless or until that happens, it's not relevant right now. But so why the change in the market, right? I know we've been droning on about this for quite some time, but we've said at some level, at certain levels, investors will return to the market, right? They will see stocks that have gone sale as representing tremendous values, too good to pass up. And there's a lot of evidence that that's taking place, and I'm not going to go through all of them now, but one of them in particular, a stock that we own and that we've seen a lot of activity in, is PayPal, right? And what you have here is a scenario where an activist investor called Elliott Management sees a great opportunity in PayPal. They see it trading at an extremely cheap price relative to the market that they're in and the potential that they have, and they have come in and scooped up a 10% stake. Now, when you're talking about a company that's about a $100 billion company, right, a 10% stake is a big deal, okay? So this company's not just throwing around $10 billion on a whim to see if maybe they're going to get lucky. Clearly, they have done a lot of due diligence on this company, and they see outsized potential at these price levels. And this is how markets turn, folks. When investors start to look through the rubble and realize there's a lot of quality companies laying in the scrap heap and it's time to do some work. So again, this is the type of deal making that we see around bottoms. So we're starting to see, the dominoes are starting to line up, right? We've gotten a bunch of Fed hikes out of the way. We have evidence that inflation's rolling over. the Fed gave us a nod last month that that pivot, that shift in interest rate policy may not be as far away as many market participants think. So all these things are adding up to a rally. Now the market has moved a lot in a short period of time. When we go back to the market here and we just look at, right, this is just over the course of 5 days, the market's tacked on about 1,000 points on the NASDAQ. And we look back over the last month, right, it hasn't been in a straight line as markets generally aren't. But it's really been a nice rally, seeing the NASDAQ move from about 10,800 to about 12,700, right? So a strong move. And these little pullbacks along the way are healthy. They help the market recharge. And if you kind of notice, even just on a, on a shorter view here, you see markets like to advance and they retrace a little bit, a little consolidation, another advance, another retrace, another advance, retrace, rinse and repeat, right? So let's keep this going. We'll be back at the highs before we know it. But let's take a look at our market heat map today. Really nice broad rally today, right? Seeing rallies in 10 of 11 sectors across the market. The one holdout being energy, and that's okay. We have some energy exposure. It's done well, but in order for inflation to roll over, energy is going to have to start coming back down a little bit. So this type of move today doesn't concern us one bit. When we look back over the last month, it's actually been, quite a strong rally, quite a broad rally, right? In the areas that you'd want to see. Defensive areas taking a step back, right? The healthcare and energy areas, and being led by technology, communication services, consumer cyclicals, right? How about this month from Amazon? Nice 23% gain in the month of July. So again, folks, we know we're not trying to gloss over this and make it all rosy. We know stocks have a lot of work to do to get back to where they were, but part of that process and the first step in that process is getting up off the mat and starting to get moving. And even with the rally that we've had in the markets through the month of July and a lot of the nice moves we've seen in stocks, investors are still terrified. They're still fearful, right? We're getting closer to neutral, right? But you would think in a bull market environment, right, which we've been in the past, if markets move 3 or 4%, this would be all the way up here in the greed or extreme greed categories. But this still tells you that people are a little unsure of the market, and that is okay. We don't blame them. But it's also, this is like kind of lighter fluid, to a potential explosion in the markets, because you have a lot of folks that left the market. And this is not just individual investors, folks, big institutions as well that are underinvested right now, right? They were preparing for what they thought was going to be that black swan in July. They pulled out of the market. They're very much underinvested. Now the market's moving up. And these folks are the ones that are moving back into the market and buying stocks, and that's where a lot of this momentum is coming from. So again, we're about, let's call it about 35-40% through earnings season, so we still have a ways to go, but we got a lot of the big ones out of the way. We've heard from the Apples, the Googles, the Microsofts, the Facebooks are now known as Meta. We've heard from some of the bigger companies like Amazon. So reports have been very good, better than expected, soothing the fears of a lot of investors that these reports were going to just be awful, right? So again, just wanted to give you an update. Still seeing constructive action in the market. We want to see the market continue to build that momentum, right? Let's take on these overhead resistance levels one at a time. And before you know it, we'll be having a discussion about these levels here yet again. So if you have any questions, reach out to us. Always here to talk to you about the things that matter with your money. Thanks for tuning in, and we'll see you back next time for the next Heritage Market Update.